Welcome to the Blockchain Hustle, where I take a look at some interesting plays of how blockchain technology is opening up new business vistas across multiple industries. Hi everyone, this is your host Meenu Serene, and welcome to yet another episode of the podcast Blockchain Hustle. Now, in this series, we are talking about the theme, how does a blockchain network and its underlying token get its economic value? As a quick recap, velocity and liquidity are two key levers in this. And in the previous episode, I shared on how a lack of liquidity limits the token adoption and thus the token's economic value. And this particular liquidity, it does not just happen, it needs to be built. And one of the components towards achieving liquidity in the markets is through the market makers. And in today's episode, we delve into this. Now, markets, they are made up of makers and takers. Who are makers? Makers are those guys who create buying or selling orders which are not carried out immediately. So, for example, if I say sell Bitcoin when the price hits $100,000. Now, as I record this, the Bitcoin has been pretty volatile. It has danced from 62,000 to 50,000, and now it is to 48,000. But, well, that's another thing. By placing an offer to trade on the order book, they are adding to the liquidity to the exchange. These makers are liquidity providers. So, for example, when you buy under a maker order, you submit a price which is less than the ask price. And if you sell under a maker order, you are submitting a price which is greater than the bid price. And these orders, they do not get executed instantly. And an order book is created, and that is how these makers add to the liquidity of the market. On the other side, we have takers. Takers are people who buy or they sell at the current market price, and their order gets filled immediately. They fill the existing orders on the order book which has been created by the makers. They are removing or taking away the liquidity from these order books. Now, by trading at the current market price, they are removing the liquidity from that exchange. And under a taker order, if you're doing a buy, the buy price is matched with the lowest of all the sell maker orders. Now, because these guys are taking away the liquidity from the market, therefore they are called the takers. And exchanges, they have trading fees. That's one of their revenue components. And generally, because makers are adding liquidity to the exchange, these makers are offered discounted trading fees. Now we come to the term market makers. Who are market makers and why do you need them? Market makers are those traders who provide liquidity for the trading pairs. These trading pairs can be Bitcoin, Ethereum, or any two crypto coin pair. And these market makers, because they add to the liquidity, they're also called the liquidity providers. So what do? They simultaneously quote both bid and the ask limit orders on an exchange. And they make a profit by collecting the bid-ask spread over multiple trades. Bid-ask spread, if you recollect, is the difference between the highest bid and the lowest ask. So in a liquid market, these guys, they need a large number of trades to get profits. Remember that in a liquid market, the bid-ask spread is small. And there is a trade-off between the margins earned and the volumes which are traded. So these market makers, they help to maintain a healthy order book and they minimize the volatility. Earlier, I touched upon one of the big challenges for the token issuers towards catalyzing their token adoption. And that challenge is the liquidity need for their token. Market makers help to address this need. And while these token makers or these issuers, they need these market makers throughout the life cycle of the token, the need is all the more when these projects or these token issuers, they go out to seek their first exchange listing. And it's not just the token issuers, but the exchanges also, which tap on these market makers for liquidity in their exchange. So this was on the basic things on the market makers. In my next episode, I'm going to talk about the automated market makers. So I do hope to see you in the next episode. Till then, stay safe. Cheers. You've been listening to the Blockchain Hustle. Did you enjoy this podcast? If so, please do leave a short review, like it, share it, download it, subscribe to it. What should I talk about next? Please do let me know your suggestions by writing to me at meenu@vlsiconsultancy.com or through any of the other contact channels as shared in the episode notes. Thanks.